Hey, welcome back to another episode of Asset Coach and Tax Strategist. Thank you so much for being a subscriber. If you haven't subscribed, hit the subscribe button. We drop episodes every Thursday. Leave us a thumbs up if you like the content. And if you have any comments or questions, add those in the comment sections. So today, as you can tell, things look a little bit different. I'm trying something new. I've adjusted my office a little bit, but I also turned off the office lights because, truthfully, it was glaring off my head. My head looked like a flashlight. But I wanted to try this to see if this was a little bit better. If you like it, hey, let me know in the comments that, hey, Bob, I like this new look. So not my new look, right? But just the kind of the environment and having more of a darker, kind of calmer background. But today's episode, I really wanted to focus on this idea of material participating, this idea of business, this idea of building wealth, but more importantly, Bob, I want to save money on taxes. And that's what everybody's in mind, right? And our members do this. This is how we get members. The first thing they want to do is save money on taxes. And if you're watching this as a member, that was how you joined Terra Firma. I was like, how do we do this? But there's no easy pathway. There's no easy pathway. But that's what we're all looking for, because we hear these TikTok videos. We heard your Bob with your Instagram video that I applied to says, yeah, but your urgency is changing the perception of what the tax code is. The tax code's not saying to do this stuff urgently. They give you tax benefits on an annual, yearly basis. You're desperate and you're trying to speed up and redefine what the system is trying to tell you. You're distracting yourself and you're making it harder for yourself. So what do I mean by that? Well, let's take a few steps back. Let's look at how and why the tax code exists. The tax code exists to generate revenue for the business of government. Your taxes help fund the spending of that business of government. When the business of government can't generate enough taxes is when they print money and put money into the system. But the government does not create money. You and I create money. What they do is they put capital into the system, in the banks, and then you and I do stuff with it. For example, if you were to go for a walk and you saw a pond or a lake that was just stagnant, it was just sitting there, and you knew it was stagnant, you knew it was just sitting there, there was no movement. Why? Because you can see algae, right? You can see this algae growing around it. It may have an odor. You see bugs, right? And you're like, oh, that's gross. Man, the city needs to do something with that, right? We get all uppity. But here's what's interesting. If you were to take the flow of water, you walk by that after a rain, right? Or if you're to take a hose and put a hose in there, or what some communities do, they'll put a fountain in the middle. Why do they do that? To create movement. That movement is what allows that water to clean itself. That is exactly what cash does. The government puts liquidity into the system, and it's our job to move it into the system. So that's why we say the tax code is written for business owners, because business owners are what create products and services that you and I as consumers need. It's the movement of those dollars. You go buy stuff because I'm providing that product or service to you. Okay. And that product or service to you is supposed to make your situation, your life, a little bit better in whatever you're trying to do. You go to work. Why are you going to work? Well, because the business that you work for is creating a product or service that other people get to benefit from. Okay. So that's how the system works. Now, you and I, as taxpayers, we pay our taxes to fund the business of government. Now, here's the thing. How do you create more revenue? Got to market. So think as a business owner. What does a business owner do to create more customers, to more clients, and sell more product or service? They've got to market. They've got to tell you about it, right? So that's why you see all these advertisements and all this stuff. So does that just happen in thin air? No, a business has to fund that. They put money into that to get a return on that capital, the return on that investment, and to create more clients and more revenue. And when you and I have more revenue as a business, we have a cost of doing business, deductions. We get credits, we get rebates, incentives, different things from the government to encourage us as a business to put more capital into the system, because they say, hey, if you can reduce your taxable income, you use these expenses to subtract from your top line revenue, then whatever's at the end of the year, if it's profit, you pay taxes on the profit. If it's a loss, you take the loss and write it off of your other income. Ooh, why do they do that? So you as a business owner have what? More capital. And if you and I have more capital, where do we put it? Back into the system. And then we have to hire more employees or more independent contractors. In the IRS's mind, more taxpayers. They're creating more revenue. They've marketed it to business owners. So the tax code, with this one big beautiful bill, when they make tax changes, they're marketing to business owners to put capital back into the system to grow their business, because they're making it easier for businesses to grow. And when a business can grow easier, it can hire more people and therefore create more taxpayers. So when we talk about changing minimum wage as an example from $7.50 nationally to $25, what are you doing? You're actually adding the cost to business. And what's going to end up happening, and this happens all over the place, go look at California and other blue states that actually change minimum wage, increase it. Minimum wage is not a lifestyle wage. It is a minimum wage. It's a starter. It's a stepping stone to go out and want to earn more. It should not be like, I've hit the mother lode with my $25 an hour minimum wage. No, go get better to earn a $25 an hour wage. It doesn't have to be minimum, but when you require it as a minimum, well, you're increasing the cost of doing business. And what happens? Less profit, less money into the system, tax revenue goes down. You create economic hardship. And that is the relationship between the government, the IRS, and us taxpayers. Why do I bring all this up? Because this is a lot of work. But if you're not a business owner minded person, how do I do this? How do I save money on taxes then, Bob? What are you talking about? Well, we need to look at, how do you make a business? How do you start a business? Here's the interesting thing. When you drive up and down the road, or you drive from your work or where your home to work, just look to both sides of the road and look at all of these businesses. They're all there to serve you. Everybody on that road, those businesses are there to serve those people on the road. So, but they're all different. And the IRS, your business partner, knows that. And this is why the IRS does not require a business to be profitable. They say, hey, if you're profitable, you will have to pay taxes on that profit. Whether it's a pass-through, meaning it comes to you as the owner, shareholders' taxes, or as a C corporation or corporation, you pay taxes as a corporation. Okay. So as we're going through this structure and this strategy and we're focusing on this, then we need to look at, okay, so, all right, now what do I do? Well, you need to try to make money. So the IRS, the government, created this process of, how are you participating in this business? They call it material participation. Now, material participation says, are you actually trying to make money? Or, in this definition of material participation, allows us to define two types of income: active, passive. That's the whole point of material participation, okay? And the rules. Now, how does the government know if you're materially participating in a business? You have to tell them. Oh, so I just say, hey, IRS, I'm material participating? No, if it were that easy. Like I said, this takes work. If something has value, it's going to need to take work. So how do we material participate? You have to document the love language. You remember that book, Love Languages, right? There's 5 love languages of how we like to be spoken to. The IRS has a love language. It's documentation. Remember, it's a legal system. And if the legal system, meaning you go into court, what do you need to do? You need to show proof. evidence, not just I got an honest looking face. I got a great smile. No, I don't have good hair, but you get the idea, right? So you have to have evidence of proof. Where's that going to come from? You need to document what you're doing. So you can tell your CPA, hey, CPA, you know what? In my business LLC, I did all these things and I've documented everything. I've been able to look at it and I totaled it up and I'm like, wow, I did 140 hours this year in this particular business. And the CPA is going to go, oh, are there any other taxpayers in that business? And you go like, well, no, just me. Like, oh, okay. So you qualify for one of the definitions. Okay, so they're going to say, oh, this isn't passive income then. This is active income. And whatever happens in that active income gets added to your other active income. So if you're working a W-2 job and you have a side hustle business that you did 140 hours a year in that, and you documented the 140 hours, your W-2 plus this active income is going to be added. Even if you lost money in this business, there's still value in that because the IRS knows over a period of time, this business will create tax revenue. It will, as long as you get more capital and you're able to do so. So you can take this loss, subtract it from your other W-2 active income, and that brings your taxable income down. Now, what if you have other taxpayers in that business? There's other people doing more work than you. Well, then it's passive and it goes into the passive bucket. And you can have passive losses offset passive gains. Okay? Just for that tax year. Now, imagine you go into the next tax year and you end up doing more work and you have no other taxpayers in that. And the year previous, it was passive, but now this new tax year, it's active. Awesome. Tell your CPA and it's active. Just because you do one thing one year doesn't mean it just goes the rest of your earning years. No. Every year, you reset the time clock to reevaluate and redocument what you did. That's why when we start January 1, our total earned income in that tax year is zero until we earn that dollar and all the way till December 31st. That's the calendar year. You get the entire year to document. And then we file our tax return, our executive summary that we send to our business partner, the IRS, and says, hey, here's how we performed. This is how the business of me did. Right? This year it was, I started a business and, things at work got really crazy. So I didn't meet my 100 hours of participation and I had to get other people to help me out. And it's passive income and I got a passive loss. Awesome. And then you go in the second year, you work hard and the things that at the office it was a little bit easier that year. And so, or you buckled down and you spent more time in your business. And so you could do more of the work yourself and you didn't have other taxpayers helping you out. You met your hourly participation rules of 100 hours a year or more. And you tell your CPA, hey, I actively participated this year. Awesome. Okay. Just proof or documentation. It literally is that simple, but it's all requiring you to do it. So it's not simple because we're complicated. We got a lot of stuff going on, but that is how the system's designed. And the more you're involved in your business, the more your business partner, the IRS, gives you, like any partnership should work. It should be a togetherness. We don't like the IRS because we feel like they're taking from us. And when you're a W-2 earner, that's the choice you made. That's the rules they have. You chose to be in that position. So if you want to change your position, you need to take action and be active in changing that and participate in changing that. You've heard the adage, there's no free lunches. Well, there are, but they're really expensive. They're probably really disgusting and you probably don't want it. You want a good lunch, you got to do something about it. Nobody said this is going to be easy. but it's worth it. Because when you do participate in your material participating and you're able to bring your tax liability down, but your wealth is growing at the same time, you have this separation. And this is when people say, oh, the wealthy get wealthier. Yes, because they're working hard to do it. They're making decisions in their life to do so. They're not sitting back and blaming and shooting these pointy fingers at everybody saying, you guys are doing all of this stuff. They're saying, no, I'm going to do this stuff. And therefore, your partner, the IRS, rewards you. That's the system. No different. There's no instant gratification, and each year is different than the previous year and the past year. That's not a problem. Wouldn't you want to bet on yourself? Kind of been doing it already to this point, especially with our members, successful medical professionals, successful doctors, bet on themselves all through high school, college, medical school, residency, so on and so forth. And now you're here. And now you think just because I did all that, everything else is going to be easy. No. And what you learned there does not translate to here. Rules are a little bit different. There's a little more information you need to know. Great. Get to know it. That's what we've been trying to do at Terra Firma, is educate you on what the system is. Here's the rules. Here's the system. We can help you, but at the end of the day, we're helping you. We're not doing for you. It's your capital, your taxes, your savings, your wealth. Not sure where we think it's anything different than that. So hopefully you like this content. A little bit of honesty, a lot of honesty. I don't know, but I think we need to know how this all works. It's very important to understand that how these rules and the system works. And maybe you can't do it on your own initially. Great, that's why we exist. And other companies like us exist, trying to help you. No handouts, but hand up, right? Do this together, arm in arm, until you don't need to do it anymore. What's the old adage? You give somebody a fish, they eat for a day. You teach them how to fish, they eat for a lifetime. But isn't it more fun to fish with somebody than by yourself? So that's what we and a lot of other companies are trying to do. We're saying, hey, let's go out, let's go fishing today. Let me teach you how to fish. So at some point, if you want to go fishing on your own, you can. Or we can do it together. It's up to you because it's your money. Thanks for participating. Thanks for your time. Make it a great day.